Good morning. Good morning. Good morning. Welcome to Friday, last day of the week. Hopefully, you've had a good trading week so far. We're going to have a good day today. My name is Tyler, and I'm going to be helping navigate you through the wild world of day trading futures. And it's going to be a good day today. I'm going to be sharing my daily trading bias. I'm going to be giving you a front row seat to all the action. I'm going to be sharing trading models. I'm going to be talking about order flow, fair value gaps, PD arrays, all that good stuff. We're going to be going over that today. So if you are here for the first time, welcome. And if you're watching after the fact, you can jump to the key moments using the chapter markers below to where all the trades that have taken, along with an explanation of what I was thinking and why. Lastly, if you are looking to take your trading to the next level, you can use Apex. Apex has a promo going on right now where you can get anywhere from 50 to 80% off your Apex evaluation accounts, and I have a code DTJ up on the top of the screen that will give you the most updated discounts around. With that, let's go ahead, open in prayer, and let's go ahead and get started. So it's going to be a good day today. Welcome, Epic. I'm glad you're here this morning. The market looks to be having a little bit of a market maker sell model look, which I'd like to see that go a little bit further. But let's open in prayer. Father, we thank you this morning. Father, I thank you that you've given us your grace that empowers us to live a life of righteousness and to live a life according to your kingdom. Lord, we just submit ourselves to your leadership today. We follow the principles of your kingdom and ask for your guidance in today's trading. Thank you. I pray for a blessing over everyone here, that they would see increase, not just financially, but they would see increase in every area of their life. Father, we pray blessing in Jesus' name. Amen. Okay, folks. Tony, good morning. Northern, good morning. It's going to be a good day. Like the word says, his mercies are new every morning. I think that's probably why I say that every morning, because it is. It's just good. Let's start from a higher time frame perspective, and let's see if we can kind of get a feel for what we could expect today. In regards to news, let's jump to the calendar here. I'll pull that up here. Let's see. Today is Friday. Friday we have nothing. 9 a.m. we got prelims on consumer sentiment. So does that mean 9 a.m.? Yeah, that's 9 a.m. That means we already had it. 9 a.m. already came and passed, so we should be good for the rest of the day. So that's all we have for that. So with that, with nothing holding us back as far as taking any trades, let's see what we have here. So we can see that price on the daily. Let's jump up even higher. We are on the last day of the week, and this is our weekly chart. We've seen a massive, massive sell-off for the past 4 weeks. Past 4 weeks has just been brutal as far as where we've came from. We've seen over 3,000 points of movement from March, what would have been February, back in February. Now, when we look lower, we have lower prices here. We could run those, which I doubt we're going to do that. We're on a Friday. Fridays typically are retracement days. Look at out of the 4 of these days, look at the wicks on these 4. Meaning we pushed lower this day and we closed pretty much to the low. This we pushed lower, but then we came back up. Pushed lower, we came back up. Pushed lower, and so far we've come back up. So if we drop down to the daily time frame, that's kind of my expectation, is that we are going to keep that low that we had from this week on Tuesday is set. That would be the low of the week right here. And we need to look at on Thursday's price action to really give us an idea what could happen next. Okay, so here is the candlestick that made the low of the week. And we really didn't expand lower, but we closed in. So for the next candle, we would expect it to move the other direction. Well, we moved the other direction, but this candle closed inside of this range. So that means we expect this low to be grabbed. We opened this week and we closed lower below this. So when you look at this candle, you would expect lower prices. So here's how I would view this. I'm expecting lower prices if we can't get above and stay above the equilibrium point, which is right around midnight open. You can see this level right here. That's from Thursday's price action. If we just can't stay above this and we continue to sell off, well then there's a good possibility we're going to see this. We're going to see this low ran or head towards this low. And we can use that as a draw on liquidity. It doesn't mean we need to take the trade all the way to the low, but we can use it as our reason to go short. Now, if we can continue to find support at equilibrium, I would like to move towards these levels up here. Now, we may not reach this high, and that's okay. There's going to be some smaller targets as we drop down to the 4-hour and lower that can be targets. The first one and the most obvious one for me is the data high from Thursday. We have a data high that was never ran on Thursday that I really would like to see. We are going to need to get some type of retracement here because we've had 1, 2, 3, 4, 5 bullish candles on the 4-hour time frame. Dropping down to the 1-hour time frame, it looks a little bit better, but we've had 1, 2, 3, 4, 5 hours in a row of bullish price action. We have our 9:30 level from Thursday that was never tagged, and then we have our data high from Thursday that was never tagged. These are going to be my initial easy draws on liquidity where I want to see price run to. Now, if we are looking at the opposite side, if we're bearish, which we could be from the previous day's candle, if we stay below this green level right here, which is the equilibrium, we could see London low and Asia low tagged. We could also see Asia low, London low tagged, and then we move higher. That's also a possibility. We also have the new week opening gap, which I already have marked out right here. You can see that. The new day opening gap. We're sitting on the hourly. It's from the close of this candle to the open of this candle, and I just drop a fib tool between them, and it gives me my levels. This is unmitigated and will need to be mitigated during New York session. So we could see price come down over here. Now, we could leave this run higher up to even this data high, which was from last week. We never ran this. This was CPI news that we never actually grabbed that data high. So we could, over the next week, retrace up to here and then run back lower. So this doesn't need to be ran today. It could be. If we see price failing to find support here, we could use this as a draw on liquidity. Dropping down to the 30-minute time frame, we do have a sweep of the 30-minute time frame. So just like the hourly and the 4-hour reversal that I talk about, we have one right here on the 30-minute, which we've swept this 30-minute high sitting right here, and this 30-minute high sitting right here. So we would look for a 3-minute candle, a 3-minute fair value gap in the 9 o'clock session. So if we go down to the 9 a.m. session, let's see if there's anything here. We would be in the first one right now. So this would be a 3-minute fair value gap sitting right here. There's 2 of them stacked together. So I'll just mark that out like that. So we want to see how this holds here. If this holds here and holds around this breaker, I would probably say we could run at least all the way down to equilibrium. This would also fill the opening range gap that we have right here. So I like the idea of initially lower prices based on just the higher time frame structure from the 30-minute. We'll see how price wants to respect this 3-minute here, and if it wants to move lower. I'm going to wait till open before I consider taking a trade. I'm not going to take it beforehand, but this is kind of some of the things I'm looking at. So we have our breaker right here. We have our fair value gap sitting right there, and we have all of this that needs to be mitigated right here. Well, that technically is considered mitigation. So we'll see if it wants to get to at least midnight open or if it wants to get down to equilibrium. See how it respected equilibrium right here? So that is our higher time frame analysis broken down for you guys. Hopefully that's helpful to give you some perspective on what we could see. So initially I would like to see lower prices. And if you look at the 5-minute, the 5-minute looks even nicer. It came into this 5-minute fair value gap sitting right here, overlapping with the breaker. So it does look good for lower prices. Northern Gold made a new all-time high. I did see that. First time at 3,000 on market. Then a quick sell off where I managed that you caught. Way to go. Actually, I'm curious. I wonder how big of a sell-off because I was watching it. Oh, we're above it. We're still above it a little bit. I think I don't see gold going back down, man. I really don't. I mean, we could see gold mitigate, these relatively equal lows. But on a daily perspective, I mean, it's pumping. I mean, look at the gap on that sucker. So I invest in gold, physical gold myself. So I'm all for it just going higher. Yeah, I mean, if with the tariffs, with us trying to get back on the gold standard, with the whole thing with Fort Knox not having its gold there potentially, I mean, I could easily see it going to 5,000. Easily see it to go to 5,000 this year. So that fair value gap is holding quite nicely. And there's the drop without us. That sucks. So that 30-minute reversal candle and the 3-minute entry played out nicely. That would have been, it's only 20 handles. Wow, these are a lot smaller candles than we've been seeing. Wow. I'm just so used to 40 handle candles that when I see, this candle here, how big is this candle? 7 points. Are we back to the normal volatility, or are we about to just experience it again here in 2 minutes? I don't know. I really don't like, we need to see it continue to sell off if I'm going to take the 930 model here in 48 seconds. But yeah, I probably will participate in this. So that played out right off the open, barely. All right, so if we continue to see expansion, I'm looking at these are my key levels initially at 930 from yesterday and the data high from yesterday. There's 930 marked out. And it looks like we'll have our first fair value gap sitting here. So I'm going to go ahead and mark that. Oh, man. I want to know how I can participate in this. I don't have any. Close above this would be the last fair value gap. Good morning, Alkai. David, good morning. There's currently an SMT on the highs between ES and NQ. Boom, let's drop down. Yeah, I see that. I mean, I'm thinking we're probably going up to these data highs. I just need to find a way I can participate in it. The first way would be a reactionary trade that rejects 930. Let's see if it gives me 10 handles here. No, it doesn't look like it so far. Struggling. It's reaching for that data high. I will probably be taking a short off of that data high. Once we hit that data high, I'm probably going to take a short from it. Data high is the candles, CPI, FOMC, non-farm payroll. They have news. That candle where the news comes out on is considered the data high. All right, so I'm going to take a quick short right here. Let's see if it gives me a retracement. All right, so there's a retracement off of the data high. It's the only thing that we really could have done right there. So for the data high, I don't know who asked that. Who asked that? Adam. Adam, the data high is this candle right here. So it's the 830 candle. See that 830? So if go back, type in on Google, type in news from Thursday at 830 and see what news was at 830 on Thursday. You'll find these candles are big. So if I go back to 830, here, there's that candle. This one candle, see that big candle? That was a news candle. News came out on that candle. Specific news. We just don't do any news. It's specific news. I don't think we have news at 10, David. I just looked earlier this morning and I didn't see any news. So if we're going to keep going higher, I don't have anything for me to go higher yet. I thought that was at 9 a.m. So if it's at 10 o'clock, then it's at 10. I'm been getting confused on my calendar because my calendar, let me show you guys. My calendar says it's at 9 a.m., but when I look at core CPI, it says it's at 7:30. This is normally when we have news come out, right? 7:30? Or am I tripping here? 8:30, 7:30. Oh, it is. This is in my time. Okay, so it is 10 o'clock. My fault, folks. 10 o'clock, we got news. So we're going to sit and be a little patient. We did take a 20-point win on the rejection of that data high. But let's just wait. Let's see what happens here. All right, so we're back to our normal size. These candles are about 20 handles, 20 points. The size of these candles. Our new normal, is that what we should call it? It's been, I've seen 40 handle candles, 40 point candles. They're huge. This is our real first significant fair value gap. If we're going to see higher prices, this needs to hold. If we're going to see a trend higher, I should say. A trend higher, this fair value gap should hold. But I doubt it since we hit data high. We're at around 930 from Thursday. That hasn't been tagged. So these two levels needed to be tagged or mitigated, and they've been mitigated. Now we're sitting inside this fair value gap. We'll see if it wants to continue the fall. I'm going to get rid of these new day opening gaps highs and lows from this week. They're overlapping 930 price, and I'd rather keep track of 930 and midnight open. This level, this new day opening gap from, I think, from Wednesday, it's still active. It's still being referenced. So we're going to keep that on the charts. And then we have our London low and Asia low down here. I'm not interested in taking anything long right now. We do have a new 15-minute candle. Let's check out the 15-minute chart. So we closed inside this range on the 15-minute, not above it. If we were to close that 15-minute above it, I'd say really bullish. I would still call this a bullish candle though. So we want to just see where this next 15-minute candle is closing. I'm not interested in taking a long because we did sweep this high. We may sweep it again, but I'm really looking to, I would love to see this be a breaker. That's what I would like to see. And I would take that. A breaker off of data high and 930, I would take that. So far, we're getting the structure for that. So I'm interested in waiting for that setup. If it wants to continue to push higher, then we'll need to change our bias and or change the narrative and figure out if it's trying to run for the previous day high. But until we see these levels act like support and not resistance, I'm not interested in taking a long up here. Yeah, ES is rocking and rolling. But we have some equal highs. So ES has some equal highs over here. Take a look. Let's jump to the 5-minute. It'll be easier to see it. All right, so we have equal highs sitting right here that haven't been mitigated with a fair value gap on the 5-minute. So that's, to me, we don't want to go short, or we don't want to look for shorts until this level's hit on ES. It doesn't need to run this high, but I do think we need to run those at least. So I mean, because these candles, ES pushed higher in the last 3 candles, and the last 3 candles have been non-movers for ES. So either for NQ, either NQ is just in a holding pattern waiting for ES to hit that high, or we're about to see NQ explode higher to follow. But I would bet on the first one, personally. Yeah, it could be doing TGIF. If you jump to the weekly time frame, here's what those levels would be. Honestly, I think we already hit it. We're already well past that, so it's irrelevant in my book. Here's we opened above the 30% level. Here's where we opened. Look at where my cursor is. It's going to be right here. Look at that. Do you see that? That's 30%. So it hasn't even, TGIF is irrelevant for today. ES is about to hit its level here, with NQ also making a high. Would I take the Epic? Would I take the inversion fair value gap to the swing low? No, but I would take it. Are you talking about this, the one that I have marked out right here? You could take it potentially to the first fair value gap or 930. I would say it would be safer to go to the first fair value gap. All right, so ES just hit its high while NQ makes its higher high. If you guys are appreciating the commentary, hit the like button for me. I would greatly appreciate it. It's really helpful. As when you go on the backside of the analytics on YouTube, your likes have a significant impact on just the overall impression that YouTube gives you towards other channels, towards you as a creator, about the video specifically, so I greatly appreciate it. Microsoft still has a little to go, but reaching for its weekly high. Yeah, I don't watch individual charts. I just use the correlating indices. So ES and NQ and YM are all correlating to some degree, but if I had to pick only two, it would be ES and NQ. I really don't do anything with YM. I like this inversion, this small inversion right here. If it's aggressive, it's more than likely going to run right past it. Or it's going to find support in it and move higher because we have these down close candles. That's not bad. If it closes. It's really small though. Watching to see if it respects that level or if it closes above it. So it closed above it. That means it's irrelevant to us right now. What is the target for the sale? Ta-da. Really, our easy target would be our first fair value gap, or 930, or this swing low in midnight open. Somewhere around here. Somewhere around here. But I mean, if you are able to get short somewhere here, that's 55 handles to the fair value gap. It's 79 to 930 and almost 100 to midnight open. I mean, I would be happy with any of these levels and call it a day. Could be, yeah. I mean, technically, I'm bullish long term if we stay above this level here. I'm willing to take a short here, but ultimately, if we just run 930 or run midnight open and start consolidating and start pushing back higher, it's a bullish day. We really need to get below equilibrium for us to consider. We'll see what happens here at 10 o'clock. It's probably going to just, if this candle stays red, we'll see an expansion. But if it gets back up here, it could just pop higher. It's so unpredictable, to be honest. And that's what I thought about going short. I did. But I didn't. Now that's a news candle. That candle there was 100 points in a second. My guess was down 2. I actually I didn't share with you guys. I put an order on because I'm like, this looks too good, but I'm like, that's just stupid to try to take a short with news. So I ended up closing it. It would have worked out. See how we closed right on that candle? The first fair value gap? That could have been enough to mitigate everything here, and it could push back higher. We don't know yet. Yeah, I closed mine about 10 seconds before. It's just, it doesn't make sense to play news because the thing is if this works out, great. You're going to try it again sometime because you're like, the first time it worked out, and then you're going to get destroyed. So I don't feel like I don't have any FOMO of missing out at all. All right, so 2 candles closed inside of this first fair value gap. We're still waiting. I'm waiting for that close. I really am. I want to see if it wants to close below and continue lower, or if it's going to find support here to move back up. You don't want to train yourself wrong, JB. There's going to be a better trade, or there's going to be another trade. So we'll wait. All right, so here's what I like. My next area of focus is going to be this. I want to see if we can get a reaction from this breaker. You know what? I think, never mind. I'm going to change my bias. I'm going to change my bias to longs. If we get back up to here, this level right here, I'll take a long on that inversion. If we roll over, I'm great. If we roll over, it's a continuation lower. But from here, we've rejected the idea of going lower, and we're staying above previous day equilibrium. We hit 930. We're staying above the first fair value gap. If we're going to continue to do that, I have to change. I can't look at taking a short when price is looking strong. So even though I want to take this as a breaker, I'm going to remove it just so I don't get tempted, because it could absolutely work out. But I'm going to choose to look for long. Unless it just rolls over here. Yes, I do, but I'm not going to take it because I think we're going to go right through it. So here's that breaker right there, right? You should be in a short right now if you thought it was. But we found support here at this first fair value gap and completely remove that. I'm like, no, I'm probably going to have to switch my bias and take a long here. I would have already been stopped out if I took that short already. Now you could wait to see where this candle closes. If this candle closes back below here, that's a good sign. If the next candle wicks higher and still closes around here, that's a great sign for maybe for it to roll over. So far I would say this is favorable for either higher prices or lower prices. You could say that this wick was reaching up to this breaker right here, right? You could say it was reaching up to that breaker. Maybe it was. But the support of this level here has me questioning it going lower. And I might be missing out on a huge trade right here. What I'll do probably is if it wants to continue down here, I'll play this inversion right there. I'll play the inversion towards these lows here. I mean, that still is 40 points. So breaker worked out. I just wasn't willing to take it. It worked out to give you, if you were to take that short right there, if you took it short right there, it gave you 50 handles and you could close it right there. And it doesn't even, you could be wrong and it could turn and run this direction and you just take 50 handles and get out. I'm not opposed to that. You can be right and wrong at the same time. But the reason why I didn't take it is I'm writing on my sheet of paper. Be more patient. Be more patient. Wait for something that looks like it has no other direction but lower. And so that's what I want. So anytime you see me looking down and writing, it's because I'm writing to remind myself. Yeah, and that was a good call, J Money. I mean, taking it off the rejection, when you see that it's coming back lower, that's an opportunity for you to test out if it's a short. You know, I could consider doing the first fair value gap too. If we close below the first fair value gap, that might be an option as well. The hourly, let's look at the 4 hour. It wicked below that. I mean, if I'm looking at the 4 hour and hourly, to me this looks bullish. Hourly, we wick down here in the first 10 minutes. That could be viewed as manipulation. before the expansion on that hourly candle. Yeah. Yeah, I'm bullish. I don't want to look for a short. And I could totally be wrong and miss all of this, but you got to come up with your bias and then stick with it. No, it doesn't. Not that I've ever heard from ICT. I am willing to take I'm willing to scalp short. So I'll look for 10, 20 handle moves for short plays. But if I'm looking for an extended long move, that's gonna I'd probably look for that for the upside. So let's see what happens if it closes relatively close to this or below this inversion. I might look at that. I'll put this up here in case I take it. I don't know what it's going to look like, so we'll see what happens here. I'm not going to take the first fair value gap now. It's too low. Too low from where where I needed it to be to where these levels were right here. So violated back and forth that first fair value gap. And going back to whoever made that comment, AM, here's how you know that it was a legitimate fair value gap or the first fair value gap. Look at these candles right here. Just come back to it and respect it. That's how you know it doesn't matter about the size. It came down to that one and turned on it like on a dime. Yes, it wicked past it, but where it closed is what I'm referring to. I'm watching this inversion right there. I do like this green candle here, so if we can close below that, I will participate in a short. I will have a standard 20 handle target. I may move it, but when I take the trade, that's where it will drop it. It doesn't look like it's going to give it to us. $15-minute closed this fair value gap out, making this a potential BPR. It's not a BPR until you actually move away from it. I mean, we want to see it move away from it before. If we do this and start running the other way, it's not a BPR. It could reach to balance this imbalance right there. That's what I'm saying. It looks like there's an unwillingness to run lower. If it goes below this fair value gap, I'll try to take that short to see if it wants to purge it. But see how, I mean, 1, 2, 3, 4, 5, 6, 7 times we've been inside this inversion or this fair value gap, and it's stayed above it. All right, looked like it was going to close there, but didn't. Gave us just a little, it's teasing us with those wicks. It is the morning sun. All right, let's see if this candle closes below it. We're starting to reach outside the time frame that I really like taking these types of trades. We're at 10:20. 10:15 is, the end of that macro period. All right, Northern, have a blessed day, man. Waiting for the close, waiting for the close, waiting for the close. Waiting, waiting, not jumping. I'm waiting, I'm waiting, I'm waiting, I'm waiting. No, don't go without me. That sucks. That's disappointing. That was the trade. We'll see if it goes further. It may not. Stopping at midnight open. Just wish it closed like here and then reached down, because my target I wanted to take was from midnight, a close below, to midnight open, 20 points. That's basically what I wanted. So if you would have been like, oh, well, I'm still going to take it. See, now you're suffering here. Now you're hurting, because the trade's still valid until we close above this inversion fair value gap right here. And there it is, it closed. So if you would have tried to been like, oh, I'm still going to take it, that would have been a total of 27 handles of a loss. I can't do that. I don't want to do that. And it ran this low right here. These small lows right here, these wicks, it ran and closed below those. So the trade was this one, but I already made up in my mind why I wasn't going to take it. The only thing that I could say that was a wrong analysis on my part is that I'm forgetting that we hit these data highs. Or we hit the data high, we hit 930. We could run for this previous day high, and we also have another data high over here. And I thought, well, if it's refusing to go lower, maybe it does want to run for these higher levels. So even though we hit a key level here, when we come back up to here aggressively, I'm thinking, well, we might just run right through it. So that kind of took off the table this, I mean, you guys heard me call this out. I told you that I wanted this to be my breaker. I wanted that to be my breaker. The other part that threw me off a little bit was I didn't want to take this because this candle, the 10 a.m. candle, also wicked the low. So if I'm using this as my target, do I want to, and we already wicked this low, do I want to take another short here thinking that it's going to rerun that low? So, I mean, it hasn't rerun that low. So for that part, I'm right. But we could have got 50 handles by taking that part right there. Just, 2, 3 of these candles. You don't have to run for the low. So I think what I should have done is did an if-then statements. If we close above, I'll go long. If we respect this breaker with the close of a candle, I go short. So I should have considered an if-then statements. If-then statements allow me to consider both directions. And I didn't there. I kind of made up my mind that I wanted to see a long. Let's go to the 2-minute. We got a 2-minute inversion right here. I like that from the manipulation higher for continuation lower. But it looks like it's going without us again. That's 10 handles. I don't like the consolidation here. I really don't. Look at all these wicks inside this fair value gap. How could I go short when I got 1, 2, 3, 4, 5, 6, 7, 8, 9 wicks on the 2-minute? So we could look at the 2-minute. Let's jump to the 2-minute. Let's do this. I like this 2-minute. If we can close 2-minute below this, it looks more attractive. So we're not out of the water completely on the 1-minute, but we may be able to participate on a 2-minute inversion to the downside. Does that make sense? Why I would say that? 1-minute obviously failed with this candle right here. But if you jump to the 2-minute, it's just a wick with that fair value gap. If you go to the 3-minute, it violated it and moved back higher. If you go to the 4-minute, it's respected it. You just got different things going on here. In the 5-minute, there is none. We are at 10:30. The next candle is a 10:30. It's going to be more than likely somewhat of an animated candle. I'm not going to take it. So even on this close, I'm not going to take it. I'm not going to take it on at 10:30. I'm not a big fan of taking trades right at 10:30. And it looks like it's going to close. I'm just not going to take it. It probably will work. I hope it doesn't actually. All right, closed inside the fair value gap, so we'll still have to wait. Yes. What? As long as you're sitting there, if you get up and leave, you turn it off. We are going up. We just take liquidity from lower time frames, rejection block. Well, if we're gonna continue to respect this, I agree with you. I mean, ultimately, I didn't take a few trades that looked nice because I felt we were going long. I'll go long on this inversion to the upside right here. That will be my long. The reason I'm not taking this one here is because that is inferior to this one because we saw price already reject that one. So even though it may close above there, how do we know it's not going to reject and move lower from there? So we might be sitting here for another 15, 20 minutes waiting for something to formulate here. Epic, I've gotten comfortable with a little feature I'll show you. I've gotten comfortable with this little feature right here. I can select the type of trade situation I want to take. And so if I'm doing a 930 model, if I'm going for 10 handles, 20 handles, I can, with a click of a button, I can create the brackets that I want, and I don't have to think about it. So I'm able to use my planning brain better than a reactionary brain. When you go onto your charts, when you're here, right, and I set a limit order, I have to still create my stop loss and my target. But I'm already in the trade and I want to try to keep emotions out of it for the most part. So setting this up beforehand, before I'm actually in the trade, allows me to be more logical for my executions. It doesn't mean that I don't extend it or move it, but I've gotten I really like that little thing, that little feature right there, and you can't do that on TradingView. That's the main reason. Yeah, you can use it on Trade Copier. Every time I take a trade here, it copies the trade. Yeah, Epic. That's I don't. Whenever you draw out whenever you draw or put out your stop loss and targets, after you're already in the trade, you know, you want to take as much emotion out as possible. Even though you'll see plenty of emotion in my trades, it's still something that I'm trying to eliminate more and more of, and to be more mechanical. Here's my trade. Here's my entry. Okay, let's let it play out. What's up, Ted? I was going to get a drink of something. Don't have anything to drink. $9.30 played out. It didn't play out technically for me because on a high volatility day, I moved my target to 20 handles and I forgot that I did that. So when I took the trade, it was set for 20 handles and it didn't reach for 20 handles. So I missed it. Yeah, the part of the model is you're not supposed to hold it. You got to follow the exact rules. I just forgot to change my target. What's up, Queens? Good morning. All right, let's jump back to the 2-minute here. We got 22 seconds. Let's see if we close below it. We're still trending lower. I'm not a big fan in lower prices, but I think this looks legitimate. And no close. Did not close inside or below the fair value gap. Tyler, what would 10 ticks be to points if it was the setup bracket? It would be 2.5. 4 points is, or excuse me, 4 ticks is 1 point. All right, so we're currently watching this fair value gap, guys. If we can close on this 2-minute below it, I like it. I mean, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13. That's crazy. Camping sounds fun. My wife wants to do something for her birthday, which is the end of the month. I need to figure out something to do for her. She said she wants to do something completely different. Maybe go hiking, go to another state, go exploring. I'm fine with that. That sounds fun. If you guys have sat here and haven't taken hardly any trades, I tried one right before 10 o'clock. We took the 930 model. Outside of that, I've pretty much been waiting. So we've been waiting for roughly an hour and have been patient, which is good. Helicopter ride sounds I don't know if she'd like that. She's not a risk taker. She wants adventure, but she wants conservative adventure. She wants, let's find a nice paved trail up a mountain made of concrete with water stops along the way. No, I'm kidding about the water stops, but she wants it to be a designated trail for sure. She just won't go into the woods. We've gone to Arkansas a few times. We have friends there. I would love to do the Grand Canyon. I think that's just a little bit further away than we're willing to drive for a birthday trip. It's about 20 hours. All right, so we're getting our displacement here. Yeah, we are going to close above this inversion right here, but I'm not interested in taking that. Yeah, I would love to start climbing mountains personally. Colorado Springs sounds fun. That's an 8-hour drive. It's not too far. It could that could totally be one. Go to Pikes Peak. Climb up Pikes Peak or something like that. Do you guys see why I chose not to take that inversion? Do you guys understand why? Who does not understand why we chose not to take that inversion to the upside? This is the one I'm talking about. Why? Who can tell me why we didn't take it? I explained it briefly, but who can tell me why we didn't take that? Running into a breaker is a good answer. Yep, yeah, that's true. This is the breaker right here. Running into the breaker. We also have a superior fair value gap that's already been rejected. So if I have a fair value gap rejection and then another fair value gap, and this one looks like it's part of some type of consolidation, I'll choose to pass on that even though if it works out. We lift our voices to God. This looks algorithmic for upside continuation here. We hit this level here, which would have been a mitigation block. We hit a 3-minute fair value gap, which we have a 30-minute reversal signature. In the 10 a.m. candle, we sweep the low, close inside the range. The 10:30 candle, we look for a 3-minute fair value gap right here to go long in. I'm just seeing it, and we just missed it, unfortunately. So that's looking good. ES looks like it wants to expand higher. This could be a propulsion block right here. I am going to take a small long right here. I think that's worth trying. Order block coming back into this down close candle inside a fair value gap. I'm not going to move my stop losses at 20 points. Let's see if it actually wants to go. I'll move my upside probably. This will be 30 handles if it hits. Move my stop to break even. And actually, what I'm going to do is take one off here. If it hits it, it might stop me out. If we can't make a higher high, I might just close this and try a re-entry. Come on. I'm going to move that there. It should go higher here. If it doesn't, I don't want it to come back and stop me out. All right, stopped out in profit on that one. I don't do the group mode I don't do copy trading inside a TradeView. I don't use TradeView's platform to do the copying. I use a third party. That's why I'm able to do it, I think. I'm bummed that that candle didn't hit my target for 30 points, right, on this candle right here. That would have been nice. I should have just been okay with leaving my stop not at break even. That's okay. We're going to re-enter this with one contract. See if we can get it expanding higher. My original stop would have been here. I don't even like that stop because we could reach down to here. Yeah, I see that mitigation block. And it's the fair value gap. I need to wait till this fair value gap closes. If we can't get above that fair value gap, I shouldn't be in a long. Outside of the first reason that I got in, which was a close above this candle here and then a propulsion block. And that was my original entry, was this propulsion block right here. So I'm gonna continue to wait and be patient. Or I should say I'm gonna force myself to be patient. I just don't like all this consolidation. All right, Ted. Take care. Yeah, we're at equal highs. It should run through these, but I need to wait for the close. Hourly wick. Yeah, it is. That just looks really nice. All of that. A lot of sitting. A lot of sitting. We're going to force ourselves to be patient. We're not going to take unnecessary risks that results in blown accounts, major drawdown. We're going to wait for the trade that looks the best, that we've planned on. And it could happen in 14 seconds. All right, I'm going to take a long. I am going to watch ES because I do agree with Cyrus that we could see a retracement once we hit this higher high. Well, let's see if we can get up to there. Stop is at break even once we hit 19,610. Stops at break even. All right, target hit. And execution done. All right, there's the move, folks. I wish I took one, and I wish I left one on, because I think we're going to have a nice little run higher here. How many of you were able to take that trade? Or how many of you were patient and waited for that setup and actually then took it to that high? That was a 30 handle move. And it wicked up to about 40 handles. So we got a 30 handle win there. I think that really was the trade that we were waiting for. We missed our first opportunity for a breaker here with the expectation we were going to move higher. And guess what? We ended up moving higher. We just had to wait another hour to get to that point of taking a trade. So we're going to call that a win, folks. We're going to call that a win. And we're going to call that most likely a day. There's no need for us to take another trade. Way to go, Cyrus. 2 wins. Way to go. Matt, nice job. Thanks, AM. So let's go back to our conversation here. And let's touch on this here. What did we mention? I mentioned that if we did not see price move below, or we found support at midnight open, 9:30, previous day equilibrium, that we were going to see higher prices. So there's a good chance we're probably going to run for the previous day high. So when we had this happen right here and we came back up, I'm like, everything's saying I should be looking for higher prices. So we run lower. The breaker plays out if you just grab 50, if you grab 50, 100 points, which, I mean, I'm not complaining from that much. But as far as just understanding bias and narrative, this played out as I was hoping. It didn't go below our previous day. This did not follow through, this breaker. This breaker ended up failing, even though it would have been an absolute beautiful trade to the lows. That's 100 points. I mean, I'm not going to complain. If you took that short and you made 100 points, that's a win. I don't care if it ends up failing. But in the conversation of narrative, did we have the direction picked out correctly? The answer is yes. The answer is we expected that it should go higher than this high because of how it was finding support at these individual levels here. And that is how we start picking direction. The best entry, I would say, was based on the 30-minute. The 30-minute, we expected higher prices. So if this candle here at 10 o'clock sweeps this low, we look for a 3-minute change in state of delivery after 10 o'clock. So let's go to the 3-minute. After 10 o'clock, do we get a 3-minute change in state of delivery? Yes, we do. We get it right. Where would it be? The 3-minute change in state of delivery would be right here. This was the lowest candle. And so we're going to get that 3-minute change in state of delivery. Then after 10:30, which is right here, we are looking for price to retrace into a 3-minute fair value gap. Well, that 3-minute fair value gap is right here. Price wicks into that at 10:42. This would have been your entry, which I didn't take because I missed it. I wasn't looking at the 30-minute. And then from this point to this high is 100 handles. So we missed out on 70 handles by taking a different model. The inversion model is great for quick scalps. It gives you the last big push, typically aggressive, and you can make a living just on that right there. You can make a living on that. But for me, what I'm trying to expand my trading into is these bigger moves that allow me to capitalize on the narrative of price, on the direction of price, and get it here and have it move way up there. NQ is extremely volatile, Queens. Very, very volatile. You got to go very small size as you're learning and growing as a trader. I mean, I fully believe that. I've made the mistake not doing that. Nice job, Cyrus. Way to go. Yeah, and with that, I think, folks, this is a good point to call the day. I think everybody should call it quits on the day. And here's the problem, though, is some people probably aren't green. Some people didn't make a green or didn't get the win, so they're like, well, I wanna end green. And that's very, very common. I felt that way many, many times. If you're going to continue to trade, then what you need to exercise is patience and wait for a similar setup. Do we have a draw on liquidity still? I would say yes. I would say previous day high is your draw on liquidity. So what do you want to wait for? You want to wait for some type of retracement that gives you an inversion that you can go long through. Or you wait for a retracement that gives you a breaker and then gives you a trade like that. And you take your long right here. So you want to wait, at least if you're trading my models. Those are my models. So that's what you would want to wait for. Would you want to just take a long right here and hope that it runs higher? No, that's a recipe for a blown account. Because it could retrace all the way down to this order block if it wanted to. You got these series of down closed candles right here. The top of that is sitting right here. It could easily retrace down to there and then move higher. So you got to be patient and wait. Force yourself to be patient and wait for a clean setup that's going to give you something like that. All right, Queens, let's pass that eval. Take it one day at a time. If you're green right now, call it a day. Call it a day. Learn to be able to walk away. Learn to be able to walk away, and like you said, you got to be prayed up. It's very easy to get greedy and want more. It's very easy to, oh, let's just get a little bit more. Oh, I'm so close to passing this account. Let's try to get another trade. And then you have a loss, and then you're like, well, let me just try to get another one to earn that little bit back. And then you keep losing, and then it ends up into a blown account. You don't need to raise your hand, but I bet you at least half of you have experienced that, because I have. Guarantee you half of you have experienced that. Your one loss turns into a blown account. Oh yeah, I mean, if you don't, and you say, if somebody came on the chat and said, nope, never happened to me, I'm too good. Let's say they don't say that last part. I would say they haven't been trading long enough, or they're lying. It's one or the other. It's one or the other, because it happens. Okay, folks, we're going to call it a day. God bless. Stay safe. Use the code DTJ if you do use Apex. It means a lot if you guys do, so thank you so much. Supports the channel a little bit. And we will be back on Monday. Monday we'll be trading fresh again. Let me just see what we got on the calendar for next week. I'll show you guys the calendar here. Next week is the 16th through the 22nd. Looks like we got news on Monday. We got housing starts on Tuesday, so Monday will be good. Tuesday will be decent. Wednesday will be good. It has news again. Thursday, we have unemployment claims at 7:30 a.m. Wow. Monday through Thursday is going to be packed. Friday, we don't have any news. We got a little bit of yellow folder news. So get ready. Save your gunpowder for next week, because next week's looking like it's going to be a decent week for trading. So, all right, folks, with that, we're going to call it a day. God bless. Stay safe. And we will see you Monday. Take care.